So we have the volume imbalance in here, these two, I guess, darker orange lines. You'll see them in a lower time frame. We had price trade down into a breaker here yesterday. So two levels I was working within is we went to a premium, which is the volume imbalance in here. Before I go any further, I'm watching to see if we have any reason to want to go higher to trade into this fair value gap here and take out the buy side here. So at that 38, 33 level. Let's go down to a 15-minute time frame. All right, so we have a drop down in here. There was a shift in market structure below this low here, that swing low. I used that. High to low, premium. This right here, you'll see is a SMT divergence. Higher, lower. This green line here is a future reversal point for a buy. You can see it there. We'll drop down to a 1-minute chart. So here is the SMT divergence. There. Take that off. Fair value gap. Right there. Ran up. One more time in here. And here. And you watch me put the stop loss in just above the swing high because it had multiple times, each one being lower. And sell side here, hold low, and liquidity pool on the previous day. Let's scrub back here. There you go. So suspect lows in here, and they clean those up rather handsomely. This is the volume imbalance level again. You can see all the work they've been doing on that overnight, working in here, and we'll see what we get this morning. Like this live account trade right here, and we're just gonna take this off here now. You can see no rented M24 server or MyFX both needed. Pretty simple stuff. Alright folks, this is a daily chart for SPOO's December contract 2022. Alright, so you can see the volume imbalance in here. We worked inside that level. I mentioned earlier in the week I was willing to see if it wanted to make a run for this. It failed. Obviously, you saw me close a live trade above the volume imbalance, and I mentioned that this would be the next draw on liquidity here. The fair value gap on this particular day, and we traded down to it and through it. Another volume imbalance for a discount here, traded down to that. Last down closed candle prior to this move higher. It's an order block, and this level here is mean threshold. So you take the high to low, find the midpoint of that. That's what that is. It would trade it into that and closed. Basically, right at the open on this is 56.5, and the close comes in at 36.53 1/4. So real close to where this candle opened. Really nice to see that type of precision. All right, folks, you can probably hear my landscapers in the background. I apologize, but it is what it is. It's free, folks. Don't complain. Buy side taken here. You watch me close the live trade as it was trading above that. The idea is we want to see it trade below a swing low after it takes buy side. It does that here. Premium fair value gap runs up into it 9 o'clock here on Thursday. Opportunity to go short there. Then we have a bearish order block here for Nonfarm payroll Friday, relative equal highs, and running back into old order flow. All of this consolidation here, it smacks into that after taking buy side. Nonfarm payroll here into the discount volume imbalance. This is the daily fair value gap I mentioned to you on Thursday. We would trade down into that. Consider that for Nonfarm payroll. Study that in reference to that market driver or volatility injection. 8:30 on Nonfarm payroll Fridays. Fair value gap here. Trades down into that, and also the mean threshold of the daily bullish order block, which is that level here. Okay, so look at the previous video prior to this tweet, and you'll see exactly what these levels are. All right, here's the 15-minute time frame for Nonfarm payroll Friday for October 2022. Buy side liquidity resting above relative equal highs. hourly bearish order block level. 8:15, price trades to a premium into a pool of liquidity, buy side. Buy orders become market orders to be counterparty to smart money selling short. 8:30, non-farm payroll reprices aggressively. This is where you're going to get hurt if you don't know what you're doing. Market trades back up into approximately midpoint of the daily fair value gap, back into this low imbalance. Notice it does not go back up to this old low where classic support and resistance theorists would expect it to. It doesn't do that. Price breaks aggressively lower into our daily volume imbalance, breaks below it, leaves a fair value gap here, trades up into it, back into the middle of the daily volume imbalance here, and then rolls over, trades into the mean threshold of the daily bullish order block I mentioned on the daily time frame. So this is the higher time frame daily PD arrays applied to and viewed through the scope of a 15-minute time frame. All right, you can see the 5-minute chart on non-farm payroll. Again, buy side liquidity pool, hourly bearish order block, aggressive repricing to the fair value gap I drew your attention to the day before on Thursday. Sell side below this low, engaged, and then one more time pass down between the high of the fair value gap and the low of the fair value gap. And again, this shaded blue area is based on the daily fair value gap. So we went from the daily down to the hourly, down to the 15-minute time frame. Now we're at the 5-minute chart. You can see a better view of how price was delivered into this fair value gap, came back out of it, and then re-delivered to it again is the fair value gap low. So now this is going to be talked a little bit more in depth in the Bridge Builders lecture tonight. It'll be a long one, obviously, but inside this range of the fair value gap, the only imbalance exists here. Trades up into it, then sells off to the daily discount volume imbalance, then creates a fair value gap there, as I mentioned, on the hourly in 15, and broke lower. Now we do have a shift in market structure right here, there, and then we have the fair value gap trade up into it there, and then we enter the lunch hour where it still drops lower, and at 1 o'clock, notice we don't have to come back up into this area here because it's not necessary, because it's price action inside of the hourly lunch. It's heavy and it's non-farm payroll, likely have a large range day, and there's nothing bullish about the stock market. You know, all this build up we had last week was just to set them up for this big decline on Friday. So there's no need for it to come back up and take out stops from the morning session because of the event of non-farm payroll, which is again one of the characteristics of why I tell you to avoid it, because there's so many things and so many caveats that it makes it complex for me to teach it to you. Howdy folks, hope everybody's doing well. As you can see, we had a little bit of a meltdown today. So I took a long in here and a second one, adding to the idea that we would run above this high and the old high, relative equal highs. That's what I was aiming for with the long. And I wanted to go short 2 contracts. I went long 4. Okay, so look at the high of this candle. This is the highest of the move up before dropping. So it's 44 3/4. My exit was 36.43. That was very, very much a blessing. Thank you, Lord. I was trying to admittedly show off today. I wanted to go long, get the stop run, and then go short 2 contracts and ride this down. I wanted it to go to 35.70, and that would have put me out on a limit below 35.70. I would not have taken the entire run, but I was not quick enough on the draw to do the short after getting out. It just was immediate. Like, it looks like it took a full minute to do that. It didn't. There's lots of gap in here, real gap. It just looks like it traded all these prices when it didn't. So it's going to want to work its way up into this here because this is way too inefficient. All right, so I know some of you probably want to see again what that looks like on a live account, because I know some of you, I will drag this up here so you can see we are again live account. And it could have been a lot more today, but it is what it is. It's fine. So here is the level at 3,400 I was looking for. That's the draw and liquidity I'm looking for this particular index. Does it go down there tomorrow or next week? I don't know, but I'm thinking that we're going to want to draw into this area a little bit better than it did. It just hit the top of the fair value gap, which is this candle's low, which is 35.06.5, and today's low came in at 35.02 even. All right, this is a 1 second chart of this morning's move. I'm going to show you. This is a real liquidity void. Okay, because the term gets tossed around rather loosely. This right there, that is a liquidity void. It's void of any buy side or sell side. No trading took place between this price point here and this price point here. So the market will absolutely want to come back up into that. And I'll extend this going forward, and you can watch how this eventually gets, and again, this is a 1 second chart. All right, as you can see at 11 o'clock or so in the morning, we entered that liquidity void where there was absence of any buying or selling. The market goes into it, comes all the way back up. Now this is just repricing to close in the void. It is not balanced at all. The only thing it's done now is offered what? Buy side. So to be balanced, it needs to come back down into this low to offer sell side. This is the first time from here to here that it's offered buy side. The absence is what? Sell side. And you can see how we have come back down, found some support here, worked back above that old high. This is neutralizing anyone that was fortunate enough to be short, like I was trying to be. So if I was treating it like a long-term position, they would have came all the way back up to stop out the position. So it's just a little bit of work on inefficiencies, buy side and sell side, and real liquidity voids. All right, so we are looking at today's price action, and I played it light because there's a lot of news drivers obviously, and volatility's off the chart. So I did some long in here, taking out that, and I did a short in here, taking out that. I did not hold it for this. I wanted to, but I was like, yeah, it's enough. I'll be done with it here. And we'll see what we see with the amp. Let's see. That's what I did today. sure in some people's eyes that's making ends meet. That's all I'm trying to showcase here, not that Lambo lifestyle. But I want to take your attention real quick up to, where is my layout here? All right, so we have the fair value gap, 3 tries higher, and remember, this is the imbalance. It still has not been balanced. This has just been a repricing. It's going to want to come back into that range if it's going to rebalance at all. Okay, study that. Come on, folks. Alright, so we have the ES December contract. Traded up into a volume imbalance in here after a gap on the restart at 6 o'clock yesterday evening. I was long yesterday and took another long on the close. Buy side imbalance, sell side inefficiency. Consolidation ahead of earnings. Market closes and opens with a gap higher. Rallies, pulls back into the order block. Expansion to the upside. Into the volume imbalance on the daily chart. That's this orange area in here. Small little shift in market structure here. Back to a bearish order block. Trade back down into a buy side imbalance, sell side inefficiency. Went long in there as well. What I'm looking for is I'm going to take a look at buy side imbalance, sell side inefficiency there. When consolidated, I want to be long going into the close. Rallied. Exit just ahead of the volume imbalance on the daily chart. Back down into a buy side imbalance, sell side inefficiency here. Long and another entry here. So there's your entry and the pyramiding right in here. And then we'll look to see if we can get above here. See if there's any juice in this lemon. Alright, so I took 3 partials in here, and I don't want to move the stop up here because if it comes down, it's fine. You know, it'll close out better than entry. Looking for likelihood of it maybe getting down into this one and trying to mosey its way up into that volume imbalance on the daily chart still. But if we take out this fair value gap here, that's not good for being bullish. In other words, if it goes down below it, this could end up becoming a resistance level, but we'll see. 7 off at 43.50, 7 off at 41 even, and 5 off at 42 even. So we'll see if it wants to pick up some more steam on the top end of this buy side and balance, sell side inefficiency. Man said he made 500 bucks. So far it looks pretty good. We can roll the stops up a little bit now. Okay, so if you look at the low on this candle here, it comes in at 37.38 3/4. The low of this candle comes in at 38 3/4 as well. So just about almost into that little gap. I wanted to see it show this kind of signature here. So far it's pretty good. Very, very small amount of liquidity resting above here, more specifically above this high and this high here. So we'll see if it wants to get up here. Right now, so far, it's already having difficulty getting through the midpoint of that volume imbalance on the daily chart. So what I'm going to do is I'm going to take 2 of them off here. And that way, it doesn't make a difference now if it goes to my final target here, which is the rejection block there. Alright, so you can see we failed at the half point of that daily volume imbalance. And my partial at 2 contracts was filled at 37.47 3/4. Stops at 38 3/4, so if it trades there, that'll stop out better than entry, and then I'll move to the sidelines. This will be the last thing I'm doing for this week. I have too many things to be monitoring risk, and just excited for Friday. Get this settlement out of the way. Alright, so I called this setup this morning in the previous vignettes on Twitter. As long as he stayed above this fair value gap, this one would likely give us a scenario for a long, taking into consideration the buy side here and here for the rejection block. And I bought the fair value gap and order block opening high in here, partial taken here at the bottom of the volume imbalance, and pyramided on this candle here. And we're going to see if we can get a run above this short-term high. The expectation is on the 8:30 news or before it, we could run into this liquidity. And there's an old high on your 60-minute chart. If you look at 37.71 1/4, I have a limit order resting right up there. finally, did some more entries up in here. Here, took some partials, and the limit order down here was filled. So not bad, not bad. I took a loss earlier. You saw that. I got stopped out. Added some up here, here, partial here. How many did I take off here? 4, and then the balance came off on a limit order at 36.82 3/4. Not bad, not bad for an old guy.